is another edition of the program, Frontier Opening Bell. Thank you, gentlemen, for coming on the show this morning. Ali Kansakyo from Rich Frontiers and Nairobi. Thank you for coming through. Bosin Omofai, Executive Editor here at Frontier Africa Reports. And of course, Parkinson Suleiman, our investments analyst, joining us on the show as well. Let's check out what the market numbers looked like yesterday. Nigeria was down some 57 basis points. The Ivory Coast BRVM Stock Exchange was also actually positive 0.08%. It's been experiencing some marginal movements back and forth lately. Yesterday was a bit of green. The Egyptian Stock Exchange EGX marginally settled upward 0.01% on Tuesday, while Kenya went lower further 0.19% after plunging by more than 3% in the previous trading session. Look at the Johannesburg Stock Exchange, that was positive by 30 basis points yesterday, Tuesday, of course, the 30th of March 2021. Let's look at what the Eastern African headlines look like today. Family Bank, net earnings up by 22.4% to 1.2 billion Kenyan shillings in 2020 full year earnings. Ride-hailing company Bolt begins foods delivery service in Nairobi, Kenya. Rwanda I&M Bank reports PAT, that's profit after tax, of some 5.1 billion Rwandan franc despite COVID-19 pandemic. Bank of Kigali, one of the largest banks in that country by way of assets, net profit was up some $38.7 million, the full year 2020 earnings. And you have Tanzania's president picking the Minister of Finance, Philip Mpango, as the vice president now. We push all those headlines to you first, Ali, to help us understand that.
Yes, thank you, Temple, for that kind introduction. Let me start with Family Bank. Look, Family Bank is not currently listed at the Nairobi Securities Exchange, and I think after these results, I imagine the Securities Exchange will be knocking on their door a little bit harder, looking for them to come and list the stock exchange. These were strong earnings. Considerably better than all the banks at the NSE. As you correctly said, on Monday we had a sharp fall at the stock exchange, mostly bank-related. Results were expected to be soft, but it was the failure to pay dividends which hurt some of those shares. In that context, Family Bank is clearly a bullish outlier. Bolt beginning food delivery. This is what the ride-hailing company Uber's been doing for a while, obviously expanding the product suite. And now that we've got this shutdown again, where restaurants can only do delivery, this is a good opportunity for them to step up. Rwanda I&M Bank reported profit after tax of 5.1 billion Rwandan francs. Pretty strong performance. The holding company reported early this morning at the Nairobi Securities Exchange, reported, just to give you the headline numbers, profit after tax was down 21%. They're paying a dividend here of 2 shillings and 25 cents. And they announced a bonus issue of 1 for 1. So I think in that context, shareholders will underpin the share price. The yield is about 5.244%, quite respectable on the dividend. You got the bonus to juice it up a little bit. So overall, I&M running a good ship in a difficult period. Bank of Kigali, the biggest bank in Kigali, very strong performance, $38.7 million, well managed, tier 1 bank over there in Kigali. And then Tanzania's president, this is the first lady president of East Africa, has picked the ex-minister of finance, Philip Mpango, as vice president. This is an interesting choice for a number of reasons. First, he is seen as not being part of the Magufuli crew from Chato, so it's asserting a degree of independence from the previous regime. You might have forgotten, but he was rolled out when he seemed to be suffering from COVID for a press conference. So some people might remember that about 2 or 3 weeks ago. But overall, I think optimism. The new president is stepping up. I think she's moving with some purpose, and investors should keep an eye on developments in Dar es Salaam.
All right, thanks a great deal for that. Ali Hossein, you certainly like to say something.
Yes, I think the interesting story about the family bank. I think it is time to get that family bank to be part of the stock market family in Nairobi. And I think if it's a family bank, let it be the family, by the way. But I'm sure how a bank listed outside a stock exchange will do better than the rest. That will be an interesting story.
Perhaps because it is a family bank, actually.
Because it's a family bank. But everybody sleeps in family. If it goes down, everybody in the family goes down. So I think it's a very good story that we'll keep an eye on. And I think I like the way the new president in Tanzania is going. As Ali said, very briefly, you want to keep someone who understands how the economy and finance runs as a vice president. And you know, women, when they get into power, just ask Chima Okadike, you know, they're going to squeeze everything they can get to make sure that the ship is tight and all that. So maybe Hassan, the new president in Tanzania, will be a new chip off the old block and see how she will put the country in a totally new direction from the Magufuli's legacy, as it were. But again, on the economic trajectory, I think everybody's keeping an eye on her as the first female president of the country.
And I bet investors are currently sitting on the fence, taking a look at what is going to happen in that space for investments. Now, thank you so much. Let's move on now to the Western African markets. But before we quickly read out the headlines, we introduce Chima Okadike, who is the consumer goods panelist at Reservoir Capital Management. Thank you for coming through. And she is the powerful lady in our midst this morning. And she will be helping us to understand some of the headlines we have right here. So let me read out the ones from West Africa. Moody's released the report yesterday, and it says Nigerian banks' loan quality is expected to weaken in 2021. You have Moody saying as well that Access Bank's buy of South Africa's Grow Bank will be some kind of credit worthy in the long run. BUA Cement proposes 2020 dividend of 2 naira 67 kobo. Of course, that's per share actually. Fidson Health corrects its dividend information, saying it's 25 kobo and not 20 kobo. We'll find a way to understand the backstory for that later on. And of course, Ghana says it is looking to raise some $5 billion via tourism by December 2022. That is coming from a very, very ambitious minister that has just been appointed. You have CEMAC standing for the Central African Financial Market Oversight Commission. Of course, the grants approved some new approvals, something that is expected to help beef up the economy there. Let me hear your comments first on the Moody's projections or forecasts. I mean, this is coming banking fresh at the time that we're saying earnings coming from some banks and listed on the Nigerian Stock Exchange. What are your thoughts on this?
Thank you, Tempo. In 2020, we thought it was going to be a difficult year for the banks, but due to interventions by the Central Bank of Nigeria and the government, we saw some stability there due to restructuring, but of those loans, of majority of their loans. But now those loans are becoming due again, and that's where the threat is, because the economy has not picked up so swiftly. The expectation is still that some of those loans are still being threatened, and repayments may be difficult. And this is why, if you look at the balance sheet of the banks, according to Moody's, there are a lot of stage 2 loans there, and stage 2 loans are loans at which the credit risk has become a bit higher than when it was initially recognized or last recognized. So this means that a lot of the books of the banks are carrying a lot of more risky loans now than the last time. And if the central bank is not going to give them some forbearance again to restructure or refinance those loans, then it means that we'll be seeing a lot of impairment charges on those banks, on the income of the banks. And when these impairment charges charges come in, it only means that profitability would not be sustained. So the whole boom we saw in 2020 might not be sustained in 2021. According to Moody's, this is the threat that will most likely the banks will most likely be challenged with. And because the government might have stretched his wallet to an extent, the likelihood that there will be some sort of intervention from the government again is not so glaring. So this as a whole, we feel we impact the books of banks in this year. However, with the increasing rates in the fixed income market, there might be some light at the end of the tunnel, because the interest income might start becoming solid again. But would it be as solid as what we saw in the trading income that they accumulated last year is yet to be seen, but we expect that if they can't find some sort of restructuring to those loans, then it means that the income at the last their profitability will be highly threatened for this year. Looking at Access, just to quickly talk about the Access Bank story there. You see Access Bank is spreading across Africa. This is like the third acquisition in about a year. There was the Transnational from Kenya, and the Carve-Out from I think Zambia. So now they have another in their wallet, and this looks to me like they are positioning for the AFCFTA, and as well as some trade financing across the continent, because really financing across Africa is become a whole lot difficult. It's difficult to get someone paid in Kenya, and because we are looking at having some consolidation and integration in terms of trade, financing is a key part of that trade, and you see a lot of banks now tending to build infrastructure around that, and as well increase their footprint across Africa. UBA is doing something similar, and with the old core structure that is coming in place, there are a lot of opportunities there for banks to actually leverage on.
Thank you very much, Akitunde, for all of that. Chima, let me come to you with the BUA Cement dividend, and of course Fidson Health dividend, making a correction that it is not 20 kobo, but 25 kobo. What's the backstory behind this?
So for the BUA Cement story, we know that 2020 was a very turbulent year for many of these companies. But coming the FY20 results, we saw that they had performed well. We saw that Q2 was at the heart of the lockdown, although that was the time where construction activities could have prevailed because people were in their homes, and you could have, carried on more construction activities without disturbances. So we should have seen more. I think I saw some construction activities that went on after the lockdown, but when we looked at their Q2 results, we saw that these companies had actually suffered a setback coming from declining activities in the real estate sector. But following that quickly, we saw that there were some rapid capex disbursements by the government after that. So that kind of helped these players in the sector. So it's not really surprising to see that the FY20 results are coming in strong. If you look at Dangote Cement's top line performance, it was able to reach or surpass the 1 trillion revenue mark. Also saw WAPCO's results coming strong, and now BUA results have come in strong. We saw that revenue grew 19% year-on-year, and when we filter that down to PAT, we look at their OPEX, admin expenses, and distribution expenses. We saw that they were able to maintain largely stable expenses despite the fact that their revenues had increased because they were able to increase volume. So overall, I think it was a good year for the cement players. And if you also look at their PAT, like I said, we saw that increase from about 60 billion naira to about 70 billion naira, which is very significant. So it stands to reason that they will try to increase their dividend payout. So the dividend payout that they've recognized now, I think 6 kobo, if I'm not mistaken, is way higher than the 175 kobo that they declared for FY19. And while many other companies have been able to, or have decided to prioritize cash cash savings, because nobody knows how the year would progress, and they also need to rebuild following what happened last year. While many companies have chosen that dividend strategy, I think this dividend strategy of increasing dividend is going to bode well for many of these companies that have chosen this path, especially with investor sentiment in the stock markets, which is very good for their pricing. I think the next story is on that I would like to touch on is on Ghana raising 5 billion naira via tourism by December 2022. So initially when I read the story, I had thought it was by December 2021, and I thought that's very optimistic, given the fact that vaccines are still being rolled out. We had some issues with the AstraZeneca vaccine. It was being suspended, now it's being reissued and all that. So I had thought December 2021, where are they going to, how are they going to get back this value? But I think that's a very realistic timeline. They would have done their valuations. I think that they may be able to get better than that if possible, because if you look at the 2019 tourism plan they embarked on, where they initiated a year return tourism agenda, trying to get foreign living nationals to come back to the country to explore as tourists. They were able to develop, they were able to gain about $3.1 billion in revenue. So given the fact that this is just following the onset of a pandemic, people may be looking to explore more or go out. People have now realized that life is short. The pandemic that happened, we were able to get through it, and it's time to explore a lot more. So I think that it's a very viable projection.
All right, and thank you so much, Chima Kedike. I never knew you are also a tourism analyst, actually, but thank you for that contribution. Before I come to you, Bosen, for your thoughts on the Access Bank and Moody optimism or bullishness, today you've got 1 minute to quickly speak to, or less than that, to speak to the BUA Cement.
Okay, thank you, Bryson. Thank you, Temple. To be very candid, looking at those numbers, I would have thought that BUA Cement performed woefully. I initially looked at it from a dividend yield perspective. If you look at dividend yield compared to their peers, they seem to be the least. The dividend yield stood about 2.8%. Well, Dangote Cement was about 7.4%, and WAPCO was about 4.5%. But just to align with what Chima said, if you go into it looking at it from a return on asset perspective, they in fact performed better than WAPCO, that would have thought would be in a better solid performance. Their return on asset was about 9%, while Dangote Cement was about 13.6%, and WAPCO was about 6%. Then in terms of payout, where is what really goes down to shareholders at the end of the day, their payout is as high as 96%, and only the only company better than them, at least in that industry, is Dangote Cement, giving about 99%. Surprisingly, WAPCO was giving about 52%. So for investors looking at staying at for a growth company, I think BUA Cement, looking at the fact that full year 2020 was is the single year at which they've been consolidated as a whole with CCNN and Obu Cement. So it looks like going forward, it's actually going to be a good investment for investors that are looking at capital acquisition and as well as improvement in dividend.
All right, thank you so much for that contribution, Bosen. Some seconds to deal with this, by way of any comments.
Yes, the authorities in Central Africa, the surveillance authorities, which is your equivalent of the Securities and Exchange Commission. Sometimes we tend to ignore the Central African markets because they are surrounded by bigger markets to the west. Then you have the Southern African community. Then of course you have the big boys within the East African community. So they're sort of sitting down somewhere in the middle between Congo, DRC, and Cameroon and others. But again, I love the news that new approvals by the Financial Services Surveillance, so what you call the Commission for Securities and Exchange, are making some new approvals. It's good news that those folks are keeping their markets up and running, despite the fact that this is a bit of a smaller market. Cameroon has a small stock exchange with less than 10 companies listed on it. The entire CIVAC, which has about a central stock exchange, is similar to the BRVM, which is for West African French-speaking countries. The Moody's report about Nigeria, on the outlook, Nigerian and economy and the banks. Some good news there was the capital buffers that remain very robust for Nigerian banks. I took note of some of, was a bit of a bittersweet report, by the way. Then the local currency liquidity will also remain very resilient according to the report. But I'm also surprised that the foreign currency pressure will ease according to, according to the Moody's report, again on the back of the oil prices that we're seeing at the high elevated of middle of 60 to 70, and the high end of 60, 64, 65, we've seen 70, we've seen 71, at least twice this quarter that ended today. So I think that is good news for Nigeria, but there's that question mark there if these oil prices decelerate. Right now, the outlook is positive on the back of the OPEC meeting, which starts tomorrow, the JTC committee, the GMMC meeting on the 6th, and the ministerial meeting on the 7th. Saudi Arabia talking about leading the rollover of the existing position for member states, and I think that will keep the market, that will keep Nigeria in the green.
Thank you very much for these contributions, Bosen. We'll move on to the Southern African markets. We've got a few minutes to the end of the show, quite all right. But then IMF-Namibia resumed talks over the approval of some 4.5 billion emergency loan in terms of Namibian dollar now. You have South Africa's FDI inflows dipping to 51.1 billion rands in 2020. South Africa's private sector credit extension rises slowly to 2.62% year on year as well. That's for the month of February. They have Angola and Zimbabwe keeping rates unchanged. That's with the central banks for these two African countries. Ali, have you got some seconds to deal with this headlines before we touch on the Northern African headline?
Yes, so just quickly, the IMF has been stepping up across the continent and making monies available to African countries. They've just released on a fast release about $310 million to Kenya. Namibia has been in a recession, and I think this is in line. I would expect this approval to come through at some point in the next few months. FDI inflows dipping to 51.1 versus 74 billion in 2019. Look, that doesn't look to me too bad an outcome given the scenario, the volatility, and what we witnessed. But it also informs you that local institutions in South Africa have been doing a lot of heavy lifting. They've had to fill that gap with the FDI inflows. South African private sector credit extension rising slowly, to be expected, but 2.62% is very anemic, as you know. Angola's central bank holding its rate steady. Look, Angola, of course, has this debt to GDP figure, which is in triple digits. It's had a very weak currency through last year, but essentially a little bit like you folks in Nigeria, it's getting some relief from the rebound in the price of oil. And the key question is, can that be maintained? Zimbabwe central bank holding rates at 40%. Of course, inflation is considerably higher, as you know. But realistically speaking, I think they can't move that up because it would crush the economy.
Thank you very much for these, Ali. Now the Northern African headlines we've got before us. We go back to Moody's comments again on some parts of Africa, and this time on Northern Africa. It says no disruption to Egypt's balance of payments due to the Suez Canal blockade. Diagnostic Services, that's Integrated Diagnostics Holdings, plans to go ahead with the EGX listing in April this year. Morocco's got Adoha successfully closing the 594 million dirhams fund loan. And of course, Radisson, which we all know, a major hotel in the hospitality space, wants 13 more hotels in Morocco over the next 5 years. Quickly, I'll come back to you, Ali, for your comments on this. I mean, how possible can the hospitality sector be of benefits to Radisson when we're talking about the pandemic days at this point? So your mic is muted, Ali.
Sorry, that's a very interesting statement, and I think it's a statement of support for Morocco's tourism industry. Here in Kenya, the model for Radisson has been to be an operator, not to be an owner. And given the on-off lockdowns we've had, I think one of the big developments in Nairobi has had to close down temporarily. So my takeaway there is that this is a significant statement. They're talking about the medium-term opportunity. They're obviously expanding at a big clip here in Africa. If I could just finally turn to your Moody's no disruption to Egypt's balance of payments due to the Suez Canal. I mean, it was very dramatic. There was a lot of drama. Fantastic memes came out about it. But at the end of the day, it was dealt with in a reasonably short space of time. There's still a backlog. The question is, will insurance rates go up for those big ships going through the canal? And will that make it less attractive as a route? We've got to find that out. But I was surprised at the level of income that's coming out of that canal. It's pretty substantial. It's an important statement that Moody's has made.
Thank you so much, Ali. Chima, any contributions on any of these headlines you want to have a go with?
Yes, I'd like to touch on the Moody's outlook statement on the balance of payments for Egypt. So we know that before the pandemic, the canal accounted for, trade from the canal accounted for about 1.5 to 2% of the country's GDP. And then because of the pandemic and reduced movements, things reduced to about 1.3% according to Moody's. So I think that's where they're coming from, given the fact that it was less than 15 days and it accounts for about 1.3% of GDP anyways. And the alternative to the Suez Canal would make transporters spend about 10 more days. So I think that activities should return swiftly back to the Suez Canal, so there should be no disruption. But I think that's where they're coming from, and that's very important for the Egyptian economy. Also, I'd like to speak on Radisson intending to build 13 more hotels in Morocco. I found that quite interesting because based on the effect of the pandemic, we saw how that affected at least hotels in Nigeria and how they had to lay staff workers off and how they had to, make a lot of cuts. So seeing that Radisson wants to build 13 more hotels in one space or one country, I think it's very impressive. It just means that there's a lot of optimistic sentiment surrounding that sector, and I think we should see that return to Nigeria. Although, with the pandemic and a lot of trends have been set, people are now more favorable to staying in one place and staying at home and just being by themselves. So I think it just bodes well for that sector, and maybe we'll see that affect the Nigerian sector as well.
All right, then. Thank you so much, Chima. Bosin, we're out of time. Any final comments on this?
Fine. I think both Ali and Chima's comment align with some of the things we've heard on the ground in terms of the risks, investment and insurance risk associated with the Suez Canal. You can't do without the Suez Canal right now. President Al-Sisi says it's not economically viable to expand it, so it's going to keep it that way. But again, everybody's keeping their eyes open and ready for when the next accident most likely will happen and how to deal with it. Thank you.
Thank you very much. Thank you, ladies and gentlemen, for your wonderful analysis on the show this morning. Chima Okedeke, the consumer goods analyst with Betiver Capital Management. Thanks so much for coming on the show. Akitunde Suleiman, excellent investment analyst. Thanks so much for joining us on the program this morning. I appreciate your insights as well. Ali Kansachu of Rich Frontiers Management from Nairobi, Kenya. Hossein Omofaye, thank you for your editorial judgments. This has been the show for today. I'm Temple Ashaju, and I'll see you next time. Bye for now.